Hi, welcome to Amateur Investing, and welcome to my bedroom. I bet you're excited. So, I've been talking a lot about support and resistance, and today I'm going to explain what I'm actually talking about when I say that. So, yeah, let's get into it. Alright, so we're going to start looking at the SPY chart, a one-year chart of the S&P 500, and I want us to start by looking at just this left side here. So, don't worry about the right side for now. So, support is basically the bottom of a trend right here. This would be the support line. You can tell it's a support line because whenever the chart goes down and hits it, it bounces up. And it doesn't have to be an exact line. It's just like it's a general guideline. And then the resistance is the opposite. The resistance is the top. So this is our resistance here. And this right here is called a channel. And what a channel is when your support and your resistance lines are basically parallel. Now, right here, you will see that we have a breakout where the trend goes outside of the channel. It can either be a breakout downward through the support or upward through the resistance, but that typically changes where your graph is looking. So what I always say, and I don't know if anyone knows what I mean, I always say that previous support becomes your new resistance, or previous resistance becomes your new support. Watch this trend line. So right here, where our old support line is almost identical to our new resistance line. So we had a breakout of our channel, we went under our channel, and our new trend follows almost the exact same line, but it's under it. Now we have a resistance down here. So with this in mind, now I'm going to explain my purchase of AESE. Alright, so I talked about how I bought AESE a couple videos ago. So I have March the 3rd historical data and then March the 4th historical data. We're going to be looking at the 3rd first. So first, I'm going to draw out the line that happened at the end of the day. So you'll notice the last chart was a full year chart and these are daily charts, but the same principle holds true. So here is our support and our resistance. You might be thinking it's like this. But if you look at it, it actually connects up here. It's the same trend going down. And this is a wedge. So a wedge, unlike a channel, is not parallel. More specifically, a wedge ends up pinching over time. And what that means is that a breakout has to happen soon, because it can't just become a line or just stop moving, right? It has to either go up or down. But because this is a penny stock, it's already at like $2. It can only go so far down. That's why I like trading penny stocks for day trading. I don't know if this is accurate or if this is real, but I feel like when there's a wedge on a penny stock, it typically shoots up. That's just how it seems to go. And now some stuff happened after market, which I unfortunately cannot pull the data for. But when I went on Google and looked up AESE on the 3rd, the night of the 3rd, it looked like that. It was going up. So now we're going to look at the 4th. So the 4th, it shoots up, then it shoots back down, and all I'm waiting for is a confirmation in the opposite direction. So I'm staring at this chart, right? Around 10 o'clock right here, you'll see that it levels off. So I'm thinking it's gonna bounce soon, and sure enough, it starts going up. So right around here is where I bought in. That's covering up, so I'm gonna take the circle away, but that's about where I bought in. It was about 292. So from that point, and remember when you're in the moment in the day trade, right, you can't see the future. You're just looking for what's actively happening. So I'm looking for new support and new resistance. And with the aftermarket data from the 3rd, I was able to sort of guesstimate where this was going to bounce. So we can see we have a clear support line going up here, and we have a clear resistance going up here. Now what you'll notice is this bounced down and then started leveling off. So at around 11 o'clock, we had a plateau starting to form here. And I had a good feeling that it was about to bounce down. I didn't want to risk it. I had already made some profit. It was only 4%, but it was better than nothing. So that's where I sold. And then you can see that at about 11:20, it went back at my starting point at about 290. If I did not have to worry about the PDT rule, and I could bet all day and all night, and I didn't have to worry about my phone battery because I wasn't plugged in, I would have bought in again here because this is where I bought in before. I saw that on the grand scheme of things that this could be a big picture support line because, again, the support and resistance concepts both act in the day trade and over longer terms. So I thought we could be seeing some support here. So if I had seen that and it started going up, I probably would have bought in again. So from that 292 buy-in, you can see that it started to go up again with both a higher valued support and resistance. And while I would have loved to buy in at 292 and sell at 350, that's unfortunately not the reality of the situation. But what this did confirm to me was that while I only made 4% profit on this trade, my theory was good. My theory was accurate. This tells me that the strategy I used to pick this stock was a very valid strategy. And while my returns were suboptimal, the returns were still there. And I'm just trying to learn. I'm not trying to master the stock market. I haven't even been at this for a month. So I hope you learned something. I hope this video was of some value to you. If you liked the video, like it. If you hated it, dislike it. Leave a comment, hit subscribe, hit the bell. You know what to do. And let me know if you want me to talk about anything else. My knowledge is limited and my experience is small, but I'm trying to learn, and I hope you're learning too. And that's the point. This isn't experienced investing. This is amateur investing. So get trading. I hope you have a good one. Bye!